Did Trump just trigger the reinvigoration of the crypto bull market? We had some big news coming overnight that we need to discuss today, and you can see in front of you that Bitcoin is responding quite well to the 50-day moving average on the weekly time frame, which has been a major bull market support band pretty much since the beginning of the cycle for Bitcoin. Now that we're starting to see a little bit of a price response, we're starting to see altcoins waking up across the board. I think we need to unpack exactly what is happening today and why it's happening. It's going to be an alpha-packed show. I think one of the most alpha-packed shows I've had on the channel in recent times, because later in the video, I'm going to go over the main altcoins that are likely to catch a bid. I don't think this cycle is actually being driven by retail. In fact, I have the data today to show you that this cycle, in fact, is being driven by the institutions. And if it's being driven by the institutions, then the type of altcoins that are going to outperform in this next leg in the cycle are probably going to be very different to the types of altcoins that perform well during retail-driven cycles. So we're going to break down that thesis later in the video, which I think is going to help you guys out a lot. There's also a token that is launching very, very soon that I think is going to be one of the biggest projects in crypto, if it isn't already. So Alpha Pack Show, if you like these market updates, make sure to click the subscribe button and hit that post notification bell. Without further ado, let's get straight into things here, and we're going to start on Bitcoin. Just a quick reminder, of course, anything in this video is not financial advice. I'll have the full disclaimer in the description below, as well as all the necessary disclosures if I have a personal position in something. So regarding Bitcoin here, we can see that it is now starting to react to the 50-day moving average on the weekly. This has obviously been a major bull market support level pretty much the entire way. I mean, this is a good sign. I wouldn't say we're, totally out of the woods from a high time frame perspective, because we actually technically didn't get a weekly close below this level. And in fact, the entire bull run, we have never had a weekly close. We've had multiple retests where we've wicked into it and then responded quite strongly. And, we've had a couple of times where it's really looked like we're going to close below, last week being one of them. But once again, there always seems to be a catalyst that comes out of the woodwork whenever we are close to this level, which sees Bitcoin reacting positively. And this time we're going to break down what that catalyst was and has resulted in a little bit of relief across markets. Now, I will say that I don't think we are entirely out of the woods from a technical perspective, because I think it's really important to note, and we discussed this on Wednesday last week, so this setup shouldn't be new to you when Paradise and Morin, the traders from the Miles High Club, came on the show, that the 108K level is still a major level. You can see I have all of the major levels on my chart marked out on the right here. We tagged range low, that's 100K, that lines up with the 50-day moving average on the weekly time frame, but you do have this range low region, which also lines up with the noodle moving average at $108,000. And structurally, this is a really important level for us to get back above in order to actually assert a microstructure shift from Bitcoin on the 4-hour, 8-hour, and even the daily chart from bearish momentum, which is lower highs and lower lows forming on the chart, to bullish momentum, to potentially having higher lows and higher highs forming on the chart. And that is the structure shift that you need for Bitcoin to come back up and retest the highs on the weekly. So from a technical point of view, this is a good sign that we have had a response in this region, but don't start celebrating and going all in and getting all euphoric like we're going to go to all-time highs next week until we at least start to have some daily closes above 108K. That's what I'll say. I still think there are great opportunities in the altcoin market, irrespective, of what Bitcoin does, even if it just chops around and consolidates. We're going to go through some of those setups later in the video, but on Bitcoin specifically and for the bull market specifically, even though some of the headlines we are getting are quite bullish and are definitely one of the reasons why we are moving up here, we do still need to reclaim that bullish pivot. So just keep that in mind. And there is a setup, because this is really top of mind, because we did a video on this last Wednesday, where Bitcoin actually comes into this zone, makes a lower high. And if we make a lower high, then this structure actually starts confirming for a potential lower low. So it would actually be quite bearish for Bitcoin, I think, if we can't get above 108K. There's a saying in trading, it's not the level itself that matters, it's the reaction to the level. So I think what's way more important than just, 108K in isolation, is how we actually start reacting on the lower time frame. So I'm talking 1 hour and 4 hour to this level. Are we showing signs of positive momentum to show follow through above 108K? Are we showing signs that the market is respecting this level? Or is it continuously being shorted and we see sell interest jumping in to actually sell in that zone? I think that's the really important thing, because I see a lot of traders and people online, speaking about key levels. And obviously, levels are super, super important in markets because these represent demand zones and supply zones where the market has interest. So we need to pay attention to these zones, but how we actually trade off them isn't just as simple as, if it hits this level, I'll buy, or if it hits this level, I'll sell. We actually need to wait to see the reaction in that zone. So of course, I'll keep you updated on the channel. Make sure you're subscribed as we start to react to this zone. But that is just the one thing I would be a little bit wary of on Bitcoin. Good news for Bitcoin is that the Asians have stopped selling. So the APAC session for a few weeks there was quite rough. We had a lot of OG Bitcoin whales selling. And although there are still some OGs coming out of the woodwork and offloading Bitcoin, pretty much been the case for the last few months now, at least the Asia session has started to improve. And we saw once again today, the Asia session helped us push up from 103K to 106K. So that is a good sign overall. But what was the catalyst for this push-up on Sunday evening into Monday morning? Well, it was, of course, this post on Truth Social by Trump, where he talks about the $2,000 per person stimulus checks that he wants to hand out. Last time we got stimulus checks, the market went crazy. I'm going to go through all the math and my full analysis from that later in the video, because prices went insane. And, in order to understand where money's going to flow, we have to get into the psychology of the retail investor and look at actually what drives markets. So we're going to do that later in the video. But the stimulus checks were a big narrative, and that helped the market go higher. And of course, the murmurs of the US government shutdown ending, I think, is also quite important, because markets hate uncertainty. So having the certainty of the government coming out of shutdown, I think will be good for markets, considering there is a lot of fiscal monetary data actually relying on the government's being active. There has been constricted liquidity flow off the back of the fact that the government couldn't issue payments or issue new liquidity, which is obviously limiting liquidity flow in the market. And you also have, major things for crypto like the Clarity Act, which has come to a standstill because of the shutdown. So the shutdown ending in tandem with the stimulus checks overall is good for the market. And I think one of the major reasons, even without the positive headline, that we are seeing a bit of a bounce across the market today is the fact that things were oversold, at least on the lower timeframes. You were seeing this in the RSI. We actually started to see this. I tweeted about it on Saturday that we started to see a lot of altcoins starting to pop, a bit of an altcoin popcorn market with a lot of older altcoins starting to run quite aggressively. And I don't think this is necessarily off the back of extreme retail demand suddenly coming into the market, but more so off the back of a short squeeze, because there are a lot of short sellers that are being forced to close their positions. And once there is a tiny bit of narrative fuel, they either rush to close their positions or people jump in to liquidate them, and then you see squeezes to the upside. There are a few super interesting setups that we're going to get later in the video, especially on the privacy coins like Stark, like ZK, like Nia. We'll go through that later in the video because I think there are some very interesting trading opportunities there. Obviously, ZEC's been running. Zcash, we're going to talk about that as well. That's been one of the major runners in the market. If you did miss Zcash, I'll tell you what you can do, and then I'll also suggest some potential beta plays which haven't run yet, because if that narrative sustains, privacy is likely going to be a much bigger narrative in the market anyway. So the good news is, if Zcash hits $1,000, $1,500, even if you are sidelined, there are some interesting plays that could potentially play catch up. But let's dive more into the stimulus checks before we get into the altcoin stuff, because I think as an investor, when something is announced, you always need to look at it critically and evaluate, okay, what could this potentially do to the market? Is it going to be as simple as retail gets $2,000 and then starts aping altcoins, or is it a bit more complex than that? So there are really two questions that I asked myself. One, are these stimulus checks going to actually hit users? Because that's, the first thing. Is Trump even allowed to do it? And if he is, two, where is that liquidity going to flow? Is it going to flow into altcoins? If so, which altcoins? And if it's not going to flow into altcoins, where could it flow? And how is that going to impact markets? So looking at second and third order effects of each event. As an investor and as a trader in markets, you're not just looking at headlines, you're always looking at second and third order effects. And if you can start to do that across the board, you will become a much better trader and investor. So let's answer those questions now. Firstly, I want to take a look at actually what happened last time we saw mass stimulus in the market. So we saw things go absolutely nuts. Bitcoin was trading at around $7,000 when checks began rolling out. It surged to $10,000 by early May, and we all know it went to $60,000 plus eventually the next year. We saw the total crypto market cap jumping from 180 to 250 while the checks were rolling out. We saw buy orders of 1,200, which was the stimulus check, spiking on exchanges like Coinbase up over 200%. So it's very clear that a lot of retail were putting their money into crypto. Now, although I still think the stimulus checks are net bullish from a liquidity point of view, I mean, it would be nonsensical to say they're net bearish from a liquidity point of view. It's clearly a lot different to what it was in 2021. In 2021, crypto, frankly, had more aura from a retail perspective. Institutions weren't driving crypto. In fact, institutions were scared of crypto. Now it's the opposite way around. Retail is scared of crypto, and institutions are embracing crypto, buying crypto, and funding crypto. I mean, I'm going to show you a project later today that's literally backed by Goldman Sachs, supported by Microsoft, supported by Deutsche Bank. Like, these are the types of institutions, obviously Larry Fink, BlackRock, that are actually investing in crypto now. But back then it was different. Back then it was a retail cycle. And whenever retail had a bit of dry powder, they were putting it into crypto, they were putting it into NFTs. It was absolutely insane. I don't think the markets will react the same this time. I don't think retail is necessarily as enamored by crypto. And in fact, I think a lot of retail traders, and this is, shown from the rise of all the stock market creators and traders, that they're more interested in equities right now. So I do think a significant portion of this will go into equities. And I mean, of course, there's going to be some that goes into Bitcoin. Of course, there's going to be some that goes into meme coins. Of course, people are going to gamble their money as well. But I don't think it's going to be as concentrated into crypto. So that's my opinion on what would happen if these checks land. But then you start digging deeper beneath the surface and you start to really ask the question, well, are these checks even going to hit the hands of Americans? And if you actually start to do some analysis, I did a GPT prompt on this, you start to realize that these actually might not hit the market and it might purely be a narrative. And that is because, as we're going to dive into, the tariffs could very well be overturned by the US Supreme Court. So this entire payout hinges on tariffs being approved. And even if they are approved, you have to keep in mind that it might not be as simple as just everyone gets a $2,000 check. Actually, just hours after Trump spoke about this, Treasury Secretary Besson explained that the dividend could come in lots of forms. So it could actually be a $2,000 net reduction in tax owed, as opposed to people just getting wired that money into their accounts. And I think psychologically, in terms of how they would spend that in the market, there's a big difference there. So I don't think we should be aping into altcoins, because this is like stuff that's literally being posted on my feed, off the basis of a $2,000 stimulus check. But clearly the narrative is strong enough, at least in the short term, to provide a little bit of relief for crypto. And that is what we're seeing across markets. Right now, there's only a 23% probability, according to prediction markets, that the Supreme Court will rule in favor of Trump's tariffs. So obviously, in terms of, this $2,000 stimulus, that would bode very badly for the feasibility of that. However, on the flip side, tariffs are generally viewed negatively by the markets. We have seen whenever we've seen tariff relief or we've seen pause on tariffs, markets have actually ran. So I think you lose some of the benefit from this temporary catalyst, but you would gain longer term a bit more stability in markets from that perspective. So there's good and bad here, but I just wanted to dive deeper into the stimulus check narrative because I'm seeing it floating around a lot. But now what I want to do is dive into some of the overarching macro reasons why I still think there could be significant upside in the market. And then we're going to drill into what is actually driving altcoin price performance this cycle so you can do a better job at positioning. We're also going to talk about portfolio positioning and risk and allocations later in today's video, because although we don't know exactly what's going to happen in the short term, of course, there's a chance that, we reject off this bullish pivot and we retest the lows, or there's also a chance that, we smash through. You don't know exactly what's going to happen in terms of price action, but what we do have a little bit more of an idea over, and I think this macro section will tie this together, is the fact that the markets still are technically in an uptrend. And until Bitcoin breaks structure, which it hasn't yet, I do think there is significant probabilities that we do come back to all-time highs, thus creating opportunities across the market. And I think that's, evident as well. If you look at the price action of the S&P, it's still making higher highs and higher lows. So betting against it here would be betting against the trend, but this trend is being propped up for a few reasons. I think ultimately there's only really one indicator which matters from a macro perspective, and that is global liquidity. And I think Raoul Pal did a great job at summing up why the trend for this is likely going to continue to be up into 2026. He says, the only game in town is rolling 10 trillion in debt. Everything else is a sideshow. This is the game of the next 12 months. Currently, the government shutdown has forced a sharp tightening of liquidity as the TGA builds up with nowhere to spend it. This is not offset by the ability to drain the reverse repo. This is hitting markets and in particular crypto, which is the most liquidity-driven sector. TradFi asset managers have had one of their worst years of performance versus benchmark and are now having to chase markets, and that is allowing tech to be more stable than crypto. 401k flows help too. If this liquidity drain keeps going longer, stocks will get hit hard too. And that's what we've been seeing. However, as soon as the government shutdown ends, this is already being forecasted, the Treasury begins spending 250 billion to 350 billion in a couple of months. QT ends and the balance sheet technically expands. The dollar will likely begin to weaken again as liquidity needs to flow. Tariff negotiations would have largely been completed, removing uncertainty, as we discussed before. Ongoing bill issuance increases, adding more liquidity via bank balance sheets and money market funds and stablecoins. The Clarity Act will get passed, giving crypto the regs that it so desperately needs for large-scale adoption by banks, asset managers, and businesses overall. We're going to talk about the number one sector that is likely going to drive in a few minutes. And then, of course, the big, beautiful bill, as we know, puts even more liquidity into the economy overall with a bunch of tax cuts and amidst other things which are going to be positive for liquidity conditions. And he also points out China is also continuing to expand its balance sheet. You just need to get through the window of pain and the liquidity flood lies ahead. I think this is a really good way to sum up the market because, we can overcomplicate it sometimes and look at, all of the short-term noise. And although, of course, there's a chance Bitcoin goes lower, and of course, there's a chance that, the market, at least for the next little period, remains rocky, we do know that the overall trajectory for global liquidity is up, and there are bigger macro factors at play, which in my opinion are likely going to continue to see this trend, for equities and for Bitcoin continue to head up and to the right. And if that is your thesis, you want to be positioned in the right areas. However, the right areas this cycle are different from what the right areas were last cycle, because last cycle was a retail game. So anything that retail was bidding was doing really well. However, this cycle, yes, of course there will be retail FOMO, especially towards the end of a cycle as they pile into higher asset prices. But the main driver behind higher asset prices isn't so much retail. This time around, it's institutional. This isn't a purely institutional index, but of course the ETF flows, of course there is an institutional component here, have shown us the demand from the TradFi market for crypto. There has been a little bit of a decline or a cooling down, which has resulted in some outflows, which is putting some pressure on the Bitcoin price. This happens alongside some of the OG whales that have been selling, and this has also happened alongside the Treasury bid starting to slow down. So the other thing that was really pumping markets earlier in the year, a few months ago, for Bitcoin, for Ethereum, for some altcoins, were the treasury companies that continued to accumulate, raise money as they were, above their NAV value, and they were using this to buy more assets. What we've seen is the valuations and the NAVs for a lot of these companies like MicroStrategy have started to come back down, and that has put pressure on their ability to accumulate more assets. So we're in, and you could see this through the charts here, a bit of a hangover stage where the DATs are no longer aggressively buying and the market is now pricing that out of the market. Now, of course, this could flip at any point. I don't think that the treasury companies are done accumulating. We just need to see them, in a lot of cases, get back above their MNAV, and we need to see liquidity in equities flowing into the treasury companies before we can seriously consider this narrative being a driving factor of the market again. And if it doesn't come back, then you have to potentially look for a new catalyst to drive markets to the upside. Because this cycle, it's the treasury companies that have been driving the markets to the upside, and it hasn't been that retail bid on Bitcoin like we saw last cycle, which has been pushing prices higher and higher and higher. And I think that, when you want to question, alongside some of the macro factors that Raoul Pal pointed out, why Bitcoin has been weak over the past few weeks, it ultimately comes down to this. And then the reason, we're focusing so much on Bitcoin here is because altcoins are just reflexive to the Bitcoin price. I mean, we've even seen over the past 24 hours, as Bitcoin's pushed up a little bit off its floor, many altcoins have gone up 10, 20, 30%. I mean, if you look at CoinGecko right now and look at 24-hour performers and weekly performers, I mean, Filecoin, 72%, Near Protocol, 45%, Uniswap, 30%, World Liberty, 25%, even some of the older coins, Polkadot, Monero, Litecoin, all up around 20%. We see big gains whenever Bitcoin makes a small move. Starknet, absolutely flying. Obviously, Zcash, absolutely flying. The privacy narrative's absolutely flying. So when we get a little bit of a move on Bitcoin, we see big moves on altcoins. So that's why we have to focus our market thesis around Bitcoin. But going back to what Raoul Pal said before about global liquidity, I do think that overall the Treasury bid could come back if there is the necessary demand coming back in for Bitcoin. It's currently not there, so we do need to weather the storm. But I do think this can be a buying opportunity overall. And at the end of the video, we're going to talk about portfolio construction for you to benefit from this over a, let's say, 6 to 12 month period, as I think we end up seeing a new Bitcoin high within that period. So instead of asking yourself in the past, what will retail buy? I think you now need to ask yourself, what will institutions buy? And I think the number one narrative that is super prominent right now is privacy. And obviously there are many more narratives like, asset tokenization and AI, and I'm bullish on these narratives, but I'm not going to speak about them in today's video because I really want to drill down on, I think what the biggest trend is right now. And that is the fact that institutions want to tokenize. We've seen Larry Fink speaking about tokenization. We've seen demand from Goldman Sachs and all these big investment banks for tokenization. But the existing rails like Ethereum, like Solana, they aren't custom built for enterprise because the way these retail-based chains are constructed in terms of their architecture and the way they decentralize is to benefit the consumer. They're consumer products, which doesn't make Ethereum or Solana necessarily a trusted chain for an institution. Institutions value privacy, they value security, they value compliance over decentralization. And I think that in conjunction with the fact that we are starting to see like big crackdowns on personal asset holdings. For example, England just announced that they're going to limit personal stablecoin holdings to £20,000, which is insane. Europe is now talking about ID for every Bitcoin transaction, and cash payments over 10,000 euros are now going to be banned. Obviously, this is staged over 2026, 2027, 2028. These nations are cracking down on this hard. And I think society is starting to get a little bit dystopian in terms of the controls now around people's capital. So there is a big narrative that is brewing here, both from an institutional point of view and from a personal point of view around privacy. And I think every headline that hits the market like these today, the stronger the narrative becomes. So that has been one of the big drivers behind the leader in the market right now, which is Zcash. Now, we spoke about Zcash on the show, I think a couple of weeks ago. I said that I would be looking at the 8-hour and the 12-hour noodle for consolidation pullbacks. We've had roughly 2 entries, but they were very shallow entries. So even myself, I wasn't able to get a significant entry or position on this. I don't really mind personally because I think the way you can play it now is if you look at the 12-hour. Firstly, this is a longer-term thesis. So if you have a long-term thesis, you shouldn't really care about what happens in the interim because at some point there'll be a dip. So if there is, a dip that takes us down, whether it's in 2 weeks, whether it's in 1 week, I mean, there was a significant dip even yesterday. That is what you can use to accumulate if, you are bullish on the Zcash narrative. That's one. Two, there are some interesting proxy trades off the back of Zcash that you can take because we know how these narratives play out in the market. You have your leader, which is Zcash, and then you have your beta plays. And there are a few beta plays which have barely run in the scheme of the privacy narrative overall because Zcash has really been the leader here. So I want to take a look at a few of them now. I've been posting these in my Discord. By the way, Discord is the place to be if you want all of this stuff first. This is where I'm posting all my thoughts at the moment, all my alpha, all my charts, all my coin updates. I'm going to share one coin with you today, but there are multiple new things or new ideas or trade positioning updates that I've shared in the Discord. So link in the description below if you want to join. We know this is not a market to be complacent. As we have seen over the past few days, we've seen prices on a lot of alts pop out of nowhere. So if you want to be exposed to my, thinking around these moves and potential trades off the back of these moves, Discord is the place to be. And we can see that it's not just Zcash from the privacy sector that has been performing really well. You have Starknet, which pushed into a major zone. This is on a big run right now. It's actually breaking through. The only thing is we haven't had a daily close yet. So I don't really want to buy off the back of a huge move like this. I feel like I missed it by a day or so, but I do find these setups pretty difficult because you're basically catching a knife, trying to time where the bottom is or trying to time the next rotation. And if you are buying in this zone, you are buying into resistance. Even though it's breaking above now, you haven't had a close. So potentially if it closes above, you can take a trade with inval at 0.17 to play the next leg because it was so oversold and because it's being touted as one of the privacy trinity alongside Zcash of Starknet, Near Protocol, and ZK. It could have further continuation, but this is just a chart to keep your eye on. I've also got one that hasn't run at all yet, which could pull a similar move that we'll talk about in a minute. ZK as well. I think this looks slightly better from a chart perspective because it pushed up into this zone, rejected. You have the pullback. Personally, I think this is a better one to enter if you had to buy one right now out of the two. Although, just keep in mind, you are buying not into resistance, but you're buying, I guess, on the thesis that, you'll come up, test resistance again. You'd probably want to TP a little bit there, see how it reacts. Remember, as I said before, it's not the level that always matters. It's the reaction, and then see if you get a flip where you can potentially look to re-enter or add size or just ride the rest of your position. So that's how I would play a reclaim setup. And then you also have Near Protocol, which is also pushing into resistance. Once again, if this flips above and you get a close, this can be an interesting one as well. I mean, a lot of these, I'm looking at the 3-day, 1-day timeframes now, but a lot of these are still significantly beat down. I mean, even if you look at a Starknet, right? Go into the weekly chart. This is done really nothing. So I know it looks like, a big move when you zoom in and you look at the chart like this and you're like, oh, I'm late to the move. Well, from a weekly point of view, and I know there's been lots of unlocks, so this doesn't tell the whole story. Like the market cap chart would be a little bit more realistic, but this actually looks like it could have more upside. So, not just condoning aping into resistance just because it might have more upside, but nonetheless worth monitoring the reaction around here. Like if you get a 1 or 2 daily consecutive closes, I think you can look at establishing this as a base for your floor entry and then looking at further continuation. This is off the back of privacy and the ZK narrative. I said before I would mention one that hasn't really run yet, but I'm monitoring. So something I'm really actively doing right now is I'm not being complacent, and waiting for Bitcoin to confirm above 108. Like I'm actively looking at trade setups, beta plays, catch-up plays. This is what I'm pretty much doing all day. And one that I think you should pay attention to is Nillion, just because it's forming this wedge right now, potentially could have a bullish breakout here. Of course, you can also have a breakdown, but because of the way these other coins have been running and the way these rotations have happened, I'm more so looking at a breakout play. And this was one of the most heavily funded blockchains for privacy back last year. And it was a really hyped launch and a lot of big creators were in it. But then there's been so many unlocks, it's just been beat down. Actually, in 2 weeks, there's, as I highlighted in my post here, another big unlock of around 4%. But sometimes you actually see squeezes into the unlocks. And there's this, on the 1 hour chart, there's a very clear level at 24. I've got the feeling that we might reverse into that zone. So there could be a trade here. And once again, you can look at a higher time frame structure flip on this. Problem is, because you have so much like downwards price action, I don't think the setup is as clear as the reclaim play on Near or ZK, but it is a lot more beat down. So I'd be looking at this one next. And then there are a bunch of other plays. There are also plays I posted in my Discord like Rail, which are also doing really well. I believe this one is now up like almost a 2x. So I remember sharing this on the AMA and I had Rail on my watch list for a while. So yeah. That one's been a pretty good one. I think that's now sitting at, this was one that Vitalik was endorsing. What is it, like $5? Maybe a little bit less, $4.80 now, $4.40. But I spoke about this at $2 on this dip actually, like roughly at $2.40. So that's been a really good one. I have a position there. I de-risked a tad when the market was breaking down, but I still have some principle in that one, which is good. Now, before I mentioned the fact that institutions are really going to value privacy, security, compliance over decentralization in terms of transactions. So we've talked about, the retail trades here, but I think the institutional trades are the private blockchains which are facilitating transactions in a private manner, but also allow infrastructure for asset tokenization, because Ethereum couldn't handle trillions of dollars in T-bills, trillions of dollars in, gold notes. It just couldn't handle it. But there are chains that are launching that can, specifically one that's launching very soon, which is Canton Network. I don't know if you guys know this, but Canton actually already has $4 to $6 trillion in TVL, making it the top RWA chain for TVL. And that's because they are supported, if you look at the cap table, by Goldman Sachs. Probably one of the most stacked cap tables I've ever seen. You've got Polychain, you've got Binance Labs, or YZI Labs now, BNP Paribas, Citadel Securities. Very, very big backers. Deutsche Bank, Microsoft also tested their product. So these purpose-built chains, I think, are becoming the obvious tokenization plays. Like a couple of years ago, if you were bullish on RWA, where could you speculate? Potentially Ethereum, potentially some of the DeFi apps, but we know that institutions aren't really using these. These are more retail-facing RWA plays, and don't get me wrong, that is also great. Retail is going to interact with RWA. There is still money on that side, but the big money, as we've asserted this cycle, has been in the institutions. So you have to look where institutional capital is going, and institutional capital is going into Canton. We've seen 4 to 6 trillion in TVL, so keep your eye on this. It's currently at 15.4 on pre-market cents, that is. I think that's roughly a 15 billion FDV. Their unlocks aren't as bad as some of the other chains. I did look into it. There are still unlocks, but it is a slightly better tokenomics model. If you watch my video on the weekend, I did a full breakdown on how you can analyze tokenomics on Grok. So I recommend watching that video, joining the link in the description of my last video, because I've got those research prompts for you. Put Canton through it. I think that's a really good use case to actually use my research prompts. So just a reminder, on the channel, it's the previous video before this. Go check out the description in that. Also leave a link in the description to the video below, because it's got my research prompts, and that can help you analyze the tokenomics. I've done the prompts myself on Canton, and you'll see the tokenomics are a little bit different to some of the other big chains that have launched. So that's one to keep your eye on. And I've got a little bit more alpha for you actually today. It's in my Discord. Once again, I wanted to remind you that all the early alphas in my Discord. I don't want to leak everything here, so I'm going to obviously keep some stuff for the community, but Humanity is one that I'd also be keeping an eye on in terms of privacy. So this is a bit of a different privacy play because it's not an institutional play per se, but if you know WorldCoin, with AI coming, I think UBI is definitely a real possibility, and human identity authentication is going to be a real possibility with deepfakes, with AI media, with trust for transactions online. How do you differentiate between a human and an agent? Well, biometrics is probably the main way. And WorldCoin has been the biggest proxy for this for a long time. One that recently launched and went absolutely crazy the other day in terms of price, but has now started to settle, which is good, is Humanity Protocol. You see it absolutely wicked up and went nuts, but it's starting to consolidate a bit now. Humanity Protocol is, I think, a 5.5x away from WorldCoin in terms of market cap. But they're also a privacy play because unlike WorldCoin, they implement zk-TLS tech, which is ZK tech, which protects users' data. So this basically enables users to verify their own credentials without revealing their underlying documents, and no one actually holds their biometrics or their information in a database. That's different to WorldCoin, where there are, and I pointed this out in my WorldCoin deep dive when I did it, significant privacy concerns. Obviously, WorldCoin has the moat with Sam Altman and ChatGPT, but I think Humanity's architecture has a lot more viability in terms of this scaling. I think people will be a lot more willing to use a product which has, ZK tech implemented to preserve their own privacy. So this is a very interesting one. Also, it's backed by big backers, Pantera, Jump, Animoca, and I think the valuation is not bad, coming in at a 5.6x discrepancy versus WorldCoin. Price action is a little bit choppy, but it's because it's a new token. It's still trying to find its feet. You can see that it's just consolidating after some pretty big moves. So keep your eye on that. I actually added a little bit of Humanity the other day. It's like I guess you could call it like an AI privacy play. So that is another one. And one other point I wanted to make today, actually I've got 2 more points. Firstly, sorry, now the video is getting a little bit long, but anyway, giving you guys alpha. So another thing I'd look into is the revenue meta. Tokens that are earning revenue, because we're still talking about, what will institutions buy, right? I think tokens that are earning revenue appeal to institutions because they can actually make an assessment on price versus tokens that are arbitrarily priced versus other comparables in the crypto market. Meaning, if you're going to see institutional interest in DeFi, in RWA, in tokenization, tokens like Aero, Hype, Jupiter, Pump, Bonk, Cake Sky, Aave Pendle, and there are more, but these tokens, I think, are going to appeal a lot more to the market. And we know the revenue meta has been so strong this cycle. I think calling it a meta doesn't really do it justice. A revenue meta is essentially just saying the market has shifted what it likes, what it values. It valued memetics last year, but now it values real revenue. And that's a good thing. And that's something that the biggest companies in the world, as they invest in crypto, that's also something they want exposure to. I mean, you can definitely build a case for why a liquid fund would accumulate hyperliquid. Hard to build a case why a liquid fund would accumulate a meme coin with, very, very few exceptions. So if you are asking yourself where are institutions going to place their bets, revenue generating tokens are a pretty obvious one alongside privacy, alongside treasury companies. And I would say the other outlier here besides tokenization is probably AI as well, but that is a discussion for another time. And as I said earlier, I wanted to talk a little bit about portfolio construction. I think this is a general rule that you can use, and you can tweak this depending on your risk tolerance and your goals. But if you keep 80% of your portfolio in core positions, so primarily long-term orientated, and 20% of your portfolio in riskier positions, so primarily trading or narrative focused, I think this gives you a pretty good balance because you have enough allocated in fun stuff, so the 20%, to stay engaged, learn, and potentially hit outsized returns, but you also don't have enough, so you're going to blow yourself up in the pursuit of big gains. Now, you can tweak this because, I read the comments on my X and some people were saying, yeah, but I don't have much money, I only have a few $100, so 80% in longer term core positions doesn't make sense. I mean, you have 2 options. 1, you could tweak the percentages to like 60-40 or 50-50, or 2, you could make your core position slightly riskier. So for me, a core position might be Bitcoin, Ethereum, Solana, Hyperliquid, for example. A core position, if you didn't have as much liquidity, could go down the risk curve just a little bit. But I would still be careful about going down the risk curve too much with your core positions because then you do run the risk of blowing yourself up. And even though making big gains in crypto is super enticing, if you blow yourself up, then you don't have the survivability to stick around to make profits when narratives arise. Like, let's say all the people that have quit crypto over even the past few weeks, like if we see a serious narrative explosion over the next few weeks and people that are watching this channel capitalize and are in the right stuff and actually understand what's happening, they all benefit because they survived, and the people that blew up don't even give themselves a chance to hit big gains. And it was a similar story. There are very few defining moments throughout the year, and I had a few of them, like Launchcoin, big defining moment of a trade. Asta, big defining moment of a trade in terms of like overall portfolio gains. And you just simply wouldn't have been able to hit these trades if you disengaged at any point. So that's why I'm a big believer in just staying consistent, showing up every day. And I appreciate everyone that watches these shows every day or every day that I upload, because you're actually staying consistent and you're putting yourself in the race constantly with, I hope, good information that means that you're always going to survive and then be able to thrive when the markets actually turn or when opportunities arise in the market. So I think the 80-20 rule is good. I just wanted to bring it up because I do get questions about portfolio construction. I think this is a good way to think of it, but obviously, you can tweak things a little bit. And this isn't including stables, by the way. So it's 80-20, and then whatever you've got on stables, I'm counting that on the side. So, if you were 30% stable coins, you could adjust that and add the weighting in here and, lower to 65 or whatever percentage makes sense based on how much stable coins you are holding. And obviously, in terms of the 20%, this is where you're going to make your big gains, obviously, but you're taking on a lot more risk. So 80% is relatively passive. Like, you just want to consolidate into good tokens. You want to DCA into good stuff. You want to focus on the top narratives in the market, but also the things that are earning real revenue, like we just discussed. But then in the 20%, this is where you have fun, and this is where you trade. And this is where, if you're a swing trader, you do a lot of your business on that front. So for example, in the Discord, we have the Trading Hub, which has all of our traders, and there's a great community that all share trades with each other. They talk about trades. We have all of our analysts here coaching each other. It's a really supportive environment to be a trader. So this is, somewhere that you can hang out if you do want to trade. We have alerts built in. And of course, each of our analysts post their setups. So Paradise has a channel posting his setups. So got to be careful not to leak too much here. Morin has a channel posting his setups, who's our other trader. Doc has a channel posting his setups, who's our other trader. Surf, who's our other trader, has a channel posting his setups. And then that's not even including Fabian and I, who are on the fundamentals and low caps and all that sort of stuff. So genuinely, I think we've built the best product in crypto in terms of an info product. Like, there is literally all the information you need here to succeed. And hopefully we put you in a good spot to maximize this 20%, because the 80%, you don't really need to do much apart from DCA, chill, make sure you're in the right stuff, maybe have some invalidation set to protect yourself a little bit against downside. But this 20% is where you really have fun and make the big gains. And that's something that, we're focusing a lot in the Discord. So link in the description below to come and join MHC. It's always a great time, especially during these periods in the market where they're really defining periods. And I never really understood why, because obviously I have the sign-up numbers, and we get a lot of signups when the market's going crazy because people want to make money. And then when the market's slow, you don't get as many signups. But I never really understood that, because when prices are going down, that's actually when you need to be the least complacent, because A, you want to be protecting your portfolio and you need a good community in order to do that and make sure you don't get wrecked. And B, when prices are low, that's actually when there's more asymmetric opportunities to the upside for you to get into. So being in a community during that period, especially a good community with good information, is even more important. So I never really understood that. I guess it's human psychology, but just because the markets are down, in fact, because the markets are down, that's a great time, to be a part of the community before everyone floods in and joins again, and then things get crazy again, and you'll have the best entries. That's just the reality of the space. And people like me and the loyal members in the group, we don't leave. We do this every single day. And I know there's a lot of you that watch these shows every day. So I want to thank you for that. I'll be here tomorrow. We'll reassess things. Hopefully this gave you a bit of perspective over the market. And I will see you in the next video. Have a lovely rest of your day. Peace out.